So is United Healthcare stock actually a good stock to invest in right now? What's going on, guys? It's Ricky with TechBud Solutions, and I'm going to be breaking it down. I'm going to be talking about the good. I'm going to be talking about the bad. Everything is going to be laid out in this video. I really hope that the way that I break things down, share with you and express the importance of never just being blindly bullish or blindly bearish when it comes down to actually considering to invest in a company. I really hope that it earned your thumbs up. Please consider subscribing, and let's go ahead and jump right into it. Let me go ahead and start sharing my screen. I am using the Webull trading application. If you ever want to download Webull, it is free. You can have more than one trading app, and it is the 5th link in the description down below if you want to check it out. United Healthcare. Why are we talking about this? You might be like, is this because of the CEO killer, Luigi Mangione? No, we're talking about this because of what is going on right now. From the time, let's talk about the timeline. From the time that whole debacle started, where one of their CEOs was killed, right, by Luigi Mangione. That initially caused a sell-off. They went from highs of 625. It was originally trading at highs of around 600, and then it sold off to lows of 480. That was during the panic. It then recovered to highs of around 550. It sold off once again, another leg down, 445, and then recovered almost fully back to 602 or 603. This was just last month. This was about 32 days ago. Look, we can click on the 1 hour time frame just so you guys can see exactly what we're talking about. 615, but realistically right around $600. This was April 14th, April. And then we were right around 590, literally a month ago. And then now we're currently trading at 289 with lows of 248. Why are we talking about this? What has happened since then? A series of things. I want to talk about all of the negative news, the reasons you should be concerned, and that not any investment in the stock market is guaranteed. So what's going on with United Healthcare? Well, first, they reported earnings. Feel free to look into that with the earnings that it actually reported. It wasn't terrible. If you look at the actual company itself and the way that it actually reports earnings, let me pull it up here for you very quickly. I do apologize. You guys could see that its overall revenue for the past few years has been on a consistent uptrend. I mean, United Healthcare is a very well-run company for a reason, right? But because of the uncertainty with Trump trying to reduce costs for big pharma, the question is this going to affect companies like United Healthcare with more regulation coming into the mix? Is United Healthcare going to really be investigated criminally? Because that's what was announced just a few days ago that added to the selling pressure even more. So there's been a series of things where even the CEO has stepped down for personal reasons. But then again, the previous CEO is now being added to the mix with an insane pay package. I think it's like a 3-year pay package for about $60 million. It's pretty crazy. Nonetheless, this stock has lost about 50% of its value in just the past 30 days. This is why I'm talking about it, because okay, this is a substantial pullback. This is an unprecedented pullback. And just like Warren Buffett always says, right? Buy when people are fearful and sell when people are greedy, right? Well, I wish it was that simple, but it's never that simple, right? Because if we look at this on the week time frame, we can see that this has been an incredibly bullish stock for such a long period of time. From early 2010 all the way to highs of really the beginning of 2025, this stock has been incredibly bullish. There has been never a pullback like this, at least in its recent history. So again, is this one of the biggest dip buy opportunities that has presented itself? Now, let me also express, when you look into the news, the CEO stepped down, the previous CEO is coming back in, they suspended their guidance for 2025, and they're being criminally investigated for possible Medicare fraud or Medicaid fraud, something like that. So feel free to look into it. If you're going to invest, even consider investing into this, you need to look into it. So there are some concerns, because if they are found guilty because they're currently being investigated, that's not going to be good news. That's going to add to more selling pressure and possibly cause UNH to sell off even more. With that being said, now that we've covered the negative news, you might be like, oh my God, I'm only what, 4 or 5 minutes in, all he's done is bag on this company. Why would I ever want to invest in this company? It looks like it's going downhill. Let me also make this very clear. I already did invest into UnitedHealth. You guys know with how much it is that I trade with. And for a few of you that are part of my LPP team, you guys know with how much I invested. I've only invested $7,500 into UNH. You might be like, what the heck, Ricky? You normally invest with like 50K, 100K, 250K. Why would you go so light? Because I'm uncertain. But to me, it looks like such a unique opportunity that I'm okay with taking a risk, but I'm not going to do it in a very, outlandish way. I don't expect to make $1 million off of this trade. It's not that complicated for me. It's like, let me now explain why I think it's a stock worth watching and worth looking into. But please, let me make this very clear. You knowing that I'm invested, I do not care if you buy it. I don't care if you short it. I mean, if you're part of my LPP team, you saw me short it, almost all of this week. I openly short it with my trading account because as it continues to sell off, there's some money to be made. But I'm invested in it on my long-term account. How does that work? Again, 2 different accounts, 2 different intentions, very different setups, right? So the first thing that I want to highlight is UnitedHealth is a very bullish company, and for a right reason. As you can see, it's a very well-ran company. Higher highs, higher lows when it comes down to, not higher lows, just consistent growth when it comes down to its revenue. If we look at the actual company itself, what it has for upside potential, even a series of analysts have a series of price targets, average of $485 per share. That's about nearly 70% of potential upside. When we look at this company, it is currently trading at a PE ratio of 12.6 times its earnings. That's incredibly low. Even if you get any of the Magnificent 7 stocks, none of them are trading at this low of a multiple. This is a company with currently a market cap of $264 billion. 264. That's even after losing 50% of its value, right? So it's lost 50% of its value. So it used to trade at least $500 billion. $500 billion was the previous market cap, right around there, right? Well, again, I want you to keep in mind, $264 billion is its market cap, but this is a company that produces $410 billion in revenue. So this company produces more in yearly revenue than it has in market cap valuation. Now, again, don't get it twisted. Don't get it confused with net income. This is a company that makes nearly $23 billion in net income a year. So that's where the PE ratio comes into play. Very, very good stock. And then it also has the dividends, right? I want to compare this, right? I want to compare this to one of the most valuable companies that's publicly traded that's safe. Apple, right? Apple's a very well-run company. Even this is trading at more than double of the PE ratio than UnitedHealth, right? Now let's compare it to a company that might be a little bit overvalued. In comparison to Tesla, 184 times its earnings. That's its P ratio, meaning that from what Tesla is valued at to what Tesla actually produces in revenue, there's a huge disconnect. You're paying a premium to own and invest in that stock right now. There's nothing wrong with paying a premium if you're okay with it, but you have to understand there's a big disconnect from what the company actually makes to what the company is actually valued at right now. I want to give you even a crazier example. We can't really talk about PE ratios if we don't pull up PLTR. PLTR, 535 times its earnings. Again, you're taking a company that only makes $500 million, but currently for PLTR is a company that is currently valued at $300 billion. So you have a company that makes less than $1 billion, half of $1 billion a year, yet it's valued at $300 billion. But again, it's guidance, right? It's projected guidance. It's not what it's valued now but it's what it can be. Palantir would have to double its revenue for the next 10 years to even get remotely close to what it's currently at. Like, it is not there by any means. Nonetheless, that's a whole nother thing. And while we're talking about this, UnitedHealth is selling off. So I love it. The reason and the thing that I want to highlight is knowing that UnitedHealth is trading within this range of 250 to 300 right now. The question that a lot of people are asking is, okay, well, I'm going to buy it now and it's bound to recover. No. Let me explain the whole breakdown of what I think, right? When I invested the $7,500 into UnitedHealthcare, I have no intention of selling anytime soon. I have no intention of UnitedHealthcare actually recovering. I actually expect things to get worse. You might be like, oh my gosh, dude, Ricky's like really not selling this thing by any means. I'll get to that towards the end of the video. Why would I want to buy it then? I find UnitedHealthcare to be in a very unique spot. We talked about fundamentally how well of a company it is, right? We've talked about how great its growth has been for the past 10 to 15 years. When it comes down to its PE ratio, it's at one of the lowest PE ratios that it's been at for the past 10 years, meaning that from what the company produces in revenue and earnings to what it actually is currently trading at, it's at one of the lowest levels. So meaning you're getting a bargain. You're not really paying a premium. It's one of the lowest PE ratios that it's had in the past 10 to 15 years. Now, why was UnitedHealthcare recovering? Like today, why did it kind of recover versus the past 2 days we were selling off even more? Let me explain this because you need to understand. And this is why I think timeline and perspective are super important. Remember, I'm not here to sell you to invest in UnitedHealthcare. I don't care if you invest. I'm just explaining to you what my thought process and my understanding of UnitedHealthcare is. UnitedHealthcare sold off for the past 2 to 3 days, not including today, because news was getting factored in that was bad, that was not already factored in, meaning the CEO was stepping down, guidance was suspended, and then the day that followed there was a criminal investigation. Again, more bad news for Medicare fraud. So therefore, if more negative news comes out, or if new news comes out that we have not factored in, just kind of like this whole trade war, when there were updates on, man, things are getting worse, markets sold off even further. But today was kind of like, okay, well, UnitedHealthcare sold off so much that at some point, if there's not more negative news coming out, it's not going to sell off forever with the same news, right? It's going to find a bottom. And I believe that's what happened on Thursday. It then began to recover. And then today it had its first green day after this massive sell-off. On top of that, it had some UNH insiders that were buying. 3 directors added over $1.5 million worth of shares. And then here are the positions. I really don't think this says much. This is $1.5 million in the grand scheme of things is not very much probably for this people. I'm just going to be straight up with you. I would not be buying because someone else is buying. I wouldn't buy UNH because I'm buying. It needs to make sense to you. Okay? So do I think that, remember, but it doesn't always make sense in the stock market. And that's why the stock market could have been recovering, because the stock market's irrational, right? It likes to get ahead of itself. So it sees this as hey, insiders that are part of UNH are buying. They're seeing this as a dip buy opportunity. I'm going to buy, right? The whole Tempest AI BS is like, well, if Nancy Pelosi bought, I'll buy. And then it starts this whole rally, right? On top of it was so oversold that the market could have overreacted, that if not more negative news is being announced, then it's bound to recover eventually, right? Or at least find a bottom and then find a middle ground. And I believe that was what we experienced today. So do I think that on Monday and Tuesday and Wednesday, we're going to have another 6% day? No. I want to see where the updates come, right? What happens with this investigation? What happens with Trump and this announcement and how he's trying to stick it to Big Pharma? Is that going to impact UnitedHealthcare? There's talks about breaking up UnitedHealthcare. That can make things worse before they get better. So you might be like, well, after knowing all of that, Ricky, why would you even invest $7,500? Well, let me kind of draw it out for you. Very simple. I have not seen a stock that is trading at this PE ratio, that is this well-known, one of the largest healthcare companies in the world, with so much value that it has fundamentally, that trades at above a 1-to-1 ratio if it were to go to zero. So if UnitedHealthcare were to go bankrupt and if this stock were to go to zero, that's a crazy, right? But this is the whole kind of like the bow for me to tie it all together. I have not seen a stock that offers at least a 1-to-1 ratio that is this good of a company and this good of a deal. I don't think ever. So what do I mean a 1-to-1 ratio? I mean that if I buy UnitedHealth Group, if I buy one share, let's not overcomplicate it. If I buy one share at $286 per share, let me update this. $286 per share. Based off of previous highs, I mean, just a month ago, we were at highs of 615. Based off of previous highs, it's 625. I'm just going to go based off of a general previous high of 600, right? We're there just a month ago, so it's not like it wasn't valued at that. It was, but all this negative news came about. So it's not that I expect it to get there anytime soon. It's just that it has been valued there before, but obviously it's going to have to break down every challenge and every obstacle that it's currently facing. That's going to take time. But if it does recover, percent-wise, this thing offers 105% ROI. But at the same time, worst case scenario, what if it goes to zero? Which even, first off, the stock won't go to zero because they'll file for bankruptcy beforehand. And then at that point, it's still going to be valued at maybe a few dollars. Again, from my experience of what I've seen in the past before. But that means that the biggest healthcare company in the United States goes bankrupt, which again, in my opinion, is not very likely. Just my 2 cents. But even with worst case scenario, this is what I mean one for one. That if I just buy one share, my profit potential is actually still greater than if it goes to zero. Isn't that insane? At $286 per share, even if it were to go to zero, versus if it just goes back to where it was a month ago and it recovers to $60 per share, it's a one for one. I'm not talking about your meme stock that pumped up 1,000% and retraced 50%, and then now that offers a one-to-one ratio. No, we're not talking about a meme stock. We're talking about the United States' largest healthcare company, a company that was valued at north of $500 billion, not because of hype, but because fundamentally it's there. It's a company that just last year reported earnings of north of $400 billion in revenue. UNH. This is a juggernaut of a healthcare company. $410 billion in revenue a year is what this produces. It's a company that wasn't contracting. It's a company that its revenue was growing. Everything was pointing up. But obviously, right now, it's experiencing a downturn, an unprecedented downturn with a one-to-one ratio. So even if I were to buy one share, my worst case scenario is that I can, if I were to buy 10 shares, let me just make it one for the sake of it being easy. One share at $286 per share, if my exit's 600 and my cut losses is zero, which again, it won't go to zero because even if a company goes bankrupt, it's going to get closed beforehand and you still have those funds. But nonetheless, let's just say zero. It offers a 1.1 risk to reward ratio. And let's be honest, there's a lot of you guys out there, including myself, that have taken trades that offer less than a one-to-one. They're terrible trades. We all know that. But if the profit potential doesn't outweigh the downside risk, normally we don't want to take it. This is a company that is not a trade. It's an investment, in my opinion. At $286 per share, I can potentially make $314 and I could potentially lose $286. It's a one for one, or really a 1.1 to 1. I thought that was pretty unique. A healthy company, at least in its past, a company with an extremely low PE ratio and one of the lowest PE ratios in the past 10 years. That is why I am talking about UNH. Now, I understand that morally, some people might not ever want to invest in UNH. I respect that. If you think that you want to short UNH, short it. I promise you, right? Like, I encourage you to do whatever you think is best. But I love talking about topics like this because it's so interesting. We are watching something unfold that is unprecedented. The U.S. largest healthcare company with a 50% downturn because so much negative news is presenting itself. And I love challenging myself. I love testing myself. So again, instead of overcomplicating it, and I'm like, man, should I invest $50,000, $100,000, and really have some skin in the game where it's like, at that point, it can become stressful because if things do get worse, even a $50,000 position, what if it drops another 50%? It's possible. I don't really want to lose $25,000 on something that I don't really understand. All I ever say to my LPP team is keep it tasteful, right? With $7,500, I bought $5,000 first, and then I bought an additional $2,500. It's tasteful. If I lose it all, I'm okay. If I double it, I'm okay with that as well, right? Keep it tasteful. And that's why we always talk about the one share test buy. That when you're thinking of considering an investment or a trade and you want to just really test things out, why overcomplicate it? Why do it with more than just one share, right? It's not like you're going to become a millionaire by investing in UNH, right? Like that's not the point of this video. The point is that you find a good quality company fundamentally, you break it down, and if it meets your criteria, you ask yourself, is this something that's worth the risk? Everything in the stock market comes at some form of risk. And remember, our job is not to avoid it, but to simply to manage it. You guys let me know down in the comment section what you think about my breakdown on UNH. Is it a company worth watching? Is it a company worth buying? Or, respectfully, is it a company worth shorting, right? Very excited to follow up. I hope that it earned your thumbs up. Please consider subscribing. And remember, I trade live every single morning, like you've heard me talk about it, with my LPP team. They get to watch me trade live every single day right at market open. And if you want to watch me, it's the second link in the description down below. And I have a little discount link in there for you whenever it is that you are ready. Like always, let's make sure that we end the year on a green note. Take care, team.